Hello everyone, good morning. Welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I am with you with the specific area of advanced business and financial management. Hope you are doing all fine everyone. Have you reviewed our portal yet? Please go ahead and do it right away everyone. The courses are available at a very good discount. If you haven't done it yet, go ahead, use the code Y541 and get it done as early as possible because this particular time period when you're getting the discounts is definitely very bleak. So everyone, acha, as I promised, we are having a concept of the day thing going on. So today we have a concept of the day as well. But before I pursue further for the concept of the day, in the last class I'd taken a specific case study which I discussed. I hope it was something which helped you out. If it helped, then please go ahead and keep on liking the videos and keep on uh, increasing that specific motivation of mine. That all depends upon you, everyone, because I think man is a social animal and recognition plays a very important role in motivation. And we have done this in module A as well, motivation. It can be intrinsic, it can be extrinsic. Intrinsic is where I feel that I think I should be there in the class, and extrinsic can be when you keep on liking the videos, you have good comments, and you have doubts. Those things definitely build up another level of motivation for any person who is in this area. So, that's specifically for me as well. So in this case, let's talk about the specific topic, everyone. Capital investment decision. Everyone, I told you, if I have to buy even a phone, I cannot buy a phone blindly because I'm gonna use the phone at least for 2.5 years. Not more, not less, at least that much amount of time is expected now. And if I have to spend a good amount of money, because of course, at this point of time, being in tech world, if I have to spend that much amount of money, I look forward towards income generation where I can get the same income back, है ना? चलिए then, that is capital investment decisions. Among these, the most primitive method is called payback period method. When I call primitive, this particular method just defies the rule of time value of money. Everyone, when I was a kid, na, my my maternal grandmother uh, used to say that she could run the house in rupees less than, I think my maternal grandfather used to earn 10, 15 rupees, and that was his earnings at one point of time, and that was sufficient to run a house. Imagine everyone today at this point of time, "Hey, I need 20 rupees to buy a pack of Lays." Does this mean that this is just because of inflation, or the value of money has definitely declined over the bit of time as well, isn't it? When I was a kid, I think 10 rupees was more than enough. I could buy a bottle of Coke for that. At this point of time, I'll get a 250 ml bottle for 20 rupees. That means over the period of time, inflation, time value of money, economic factors have definitely affected the value of money that was in the past and what it has in the present. That is one particular eye opener. So, what do the people do in this case? When we talk about the payback period method, na, it just ignores the fact that there is something called time value of money. In this case, what do? What does the payback period represent? Everyone, what does this period represent? Everyone, what does the payback period represent? It represents the time period in which you can recover the money. Okay? That's the thing that they talk about. In this case, they literally talk about this specific area altogether, everyone. So when we talk about this specific area, then can I say that when we talk about cost of capital, when we talk about payback period is the period in which I can recover the funds that I've invested in one particular thing. The total profit made by the investment, the period at the end of which the initial investment is entirely returned to the investor, the time taken to start earning profits from the investment or the period during which the investment generates revenue. There's nothing related to the period for an investment generation, everyone. That sounds so weird. In this case, the time taken to start earning profits, no. In how much time I can recover the funds that I've invested is pay back. That's why the term back is there now. So this is one particular area which I can say that this is the period in which we can actually recover the entire funds that we have invested in. So the period at the end of which the initial investment is entirely, what the important point is, it is entirely returned to the investor. Clear, everyone? Next question. Okay, how is the payback period calculated when the net cash flow is the same everywhere? This is uniform cash flows, everyone. This is one of the coolest ones. Acha, everyone, every day I can have 1 rupee. In how much time I can recover 10 rupees? You'll be like, why am I asking this stupid question? It would be 10. How did you calculate? You can calculate it by having 10 divided by 1. The payback period is calculated when the net cash inflow is the same everywhere. In this case, total investment divided by number of years, no estimated cash inflow divided by total investment, or investment total divided by annual cash inflow, or cumulative net cash flow divided by total number of years. In this case, the answer is C, everyone. Amount to be initially invested divided by annual net cash inflow per year. A project costs 20 lakh and yields a profit of 3 lakh after depreciation. Straight line 10%. That means, but before tax we're standing at 50%. Acha. Project cost is 20 lakh, 20 lakh ka 10%. That means 2 lakh is basically your depreciation. And now this is after depreciation, so you add back depreciation. And then you need a CFAT basically, na? Cash flow after tax. So what's going to be the answer? The payback period is 2.45, 6.57, 5.71, and 7.68 years. Everyone, take a moment and let me know the answer. What's gonna be the answer, everyone? The answer is 5.71 years. How do we calculate it? Take your profit before tax, remove tax out of it. That is 50%. You get profit after tax, you get PAT, add back depreciation. So you get the total cash inflow. This is the point that is called CFAT. Everyone, nobody has asked me this question yet. Why do you remove depreciation and then you add it back? First of all, I make a cry that pata hai, I have to pay depreciation. After depreciation, we definitely make things different, na? After removing the depreciation out of it, you have to pay tax. That means there's a tax relief. After paying tax, you add back depreciation because everyone, if I'm using my phone, it's been 2 years that I'm using my phone. The depreciation has to be added back. है ना? The depreciation written off basically states that when we have depreciation, it has to be added back. Because it's a non-cash expense, I don't pay anyone just because I use my phone. Isn't it? Everyone, chaliye then, let's talk about the next part. In this case, what did we do? We took up the 20 lakh rupees that we are supposed to pay. You divide by 3.50. 3.50 is your per year income. You divide 20 lakh by 3.50, giving you 5.71 years. Done, everyone? Chaliye then. Let's go ahead. Why might the payback period calculation involve part of year? Obviously, sometimes you receive the money partially even. Na? Not every year is going to be the same. है ना? And at the same time, if you go for non-uniform money receives, in this case, you don't really get it because cash flows are typically uneven throughout the year. Sometimes they are even, sometimes they're uneven. Then to account the seasonal variations in cash flows, seasonal variations are definitely there, but not in every organization. To provide a more accurate estimate, yeah, you can say when the investment doesn't fall exactly on the year end, to include the effect of inflation. No, it's not about inflation, everyone. So what's gonna be the answer? The answer to this question is to provide more accurate estimate when the investment return period does not fall on the year end. Okay? If it doesn't fall on the year end, that is what we do. Done? चलिए. Now let's move on to the next chapter, everyone. Sorry, next question. Acha, next methodology even. everyone? The point says what does the accounting rate of return method helps determine the payback period? Method does not. Accounting rate of return method is actually more accounting. This is not a capital investment वाली चीज. ठीक है? In this case, what will we do? The total revenue generated, return on investment, everyone. If I put 10 lakh and I count it out, then things are more sorted. That's what I strongly believe in. Even if I put 1 rupee and then we can look forward to these things, then things are definitely different. है ना? हाँ जी. Cumulative cash flow, the recovery period for the investment. What's going to be the answer according to you? The correct answer is the rate of return. चलिए. Let's move on to the next point, everyone. Okay. Which of the following is a reason why accounting rate of return scores over the discounted cash flow? पता है actually ना, accounting rate of return is a simpler method. It is very clear as well. And it's something that goes back to the point of recording from the accounting point of view. The clarity makes it different. है ना? So in this case, it takes into account the entire project life. Yeah, it does. Rather than just being the accounting rate of return. It considers the possibility of assets outliving their rated life. They do. It provides a long-term estimation of the revenue and the costs and requires detailed modeling. The best answer to this question is B. It considers that even if the organization is still there and long-term period is there, it considers everything. Done? चलिए then. Next question. What does NPV method? This is a method which actually considers time value of money. The total inflow of cash, the difference between the present value of cash flows, inflows and outflows, the future or undiscounted value of cash. All cash flows. Everyone, what is net present value in this case? NPV is basically the difference between the present value of the cash inflows and cash outflows. Okay? It considers this part. Everyone, why is a rupee now considered more valuable than the same rupee a year later? In the context due to inflation or present principal future value, or this is a concept of present value, or due to market fluctuation, just because of concept of present value, PV factor. Done. Chaliye then, let's move on to the next point. How are the future cash flows treated in terms of NPV, everyone? Future cash flows are basically taken into consideration and they are divided, and we find out their present value. They are given full weightage without any discount. They are given discount further They're discounted at the rate which is at expected rate of return. This is the correct answer. They're inflated, including inflation. No, they don't include inflation. Or they ignore the present value. This is also wrong. The correct answer is B only. Done, everyone? Chaliye. Before I conclude my session, let's move on towards the concept of the day. Just a moment. B. Let's talk about the concept of the day, everyone. What's the concept of the day? Concept of the day is payback period. Payback period basically refers to the period in which you can recover the entire amount of your project. Initial investment or original cost of the asset divided by cash inflows. In this case, what do we do? Whatever your initial investment would be, you divide it by the cash inflows. Your cash inflows can be said as something that you get every year. If it is uniform, we divide it. Done, everyone? This is payback period. Everyone, if you haven't taken up courses, then please take it up as early as possible. This particular formula is used exclusively in only one thing, that is when you have uniform cash flows. When you do not have uniform cash flows, then this particular method is not used at all. Okay? This method is used only and only when the organization has uniform cash flows. That 10 rupee, 1 rupee thing that I talked about, that is there. Chaliye. Before I end the session, everyone, let me show you our website, that is www.adda247.com. Go on to the area of JIB and CAIIB and go on to the area of CAIIB June 2024. Our power pack revisions are out, but though Mahapack is there in double validity. Josh batch and Zeal batch is there for you. If you're planning to take up the double validity, then it is better to go for Mahapack because you have to pay minimum amount and you get the maximum discount. Just use the code Y541 and get this particular validity at 6823.95 rupees. So go ahead and get it now. Don't forget to use the code Y541. Thank you, everyone. Bye bye.